Welcome all to the first practice to pass session of F9 for June 2018 attempt. My name is Asad Ijaz and I'm your trainer for the subject F9. Please note my email address. It is asad.ijaz@scans.edu.pk. So in the next 5 days, I will be taking you along some practice questions of F9 of the key topics. This time around, it is different from what we had covered in March 2018 attempt. The reason for this is that we feel, or rather ACCA feels, that we already had covered a brief description of each and every topic in March 2018. And now, we think as ACCA and as a training expert that we should now focus more on doing more and more practice questions. So whoever wants to learn each topic, for example, he wants to revise the investment appraisal, the links of the March 2018 Prepare to Pass has been sent to you, and you can review these. So let's start with the introduction, with the first slide of today's session. So what is the objective of webinar? First of all, it is how to perform questions in CBE environment. As we all know, by now, F5 and F9, both F5 to F9, all of the exams are compulsory on the session CBEs, and they are different from the objective test phase that you have covered in F1 to F4. So we will see how to perform the questions in the current environment. So it is a question-based revision of key topics. We will be covering a question-based topics of key topics. I think there's some problem in screen sharing. So the technical team is working on it. So let's have a break of a couple of minutes and we will be continuing once again.
वो उधर से कर रहे हैं।
Okay, let's do it once again with the introduction. I hope we have covered up all the technical issues. My name is Asad Ijaz, and I will be taking you along with this practice to pass F9 for June 2018 attempt. This time around, we will be discussing only the practice questions and not the key topics. The reason for this is that ACCA has decided that we already had covered in March 2018 attempt all the key areas. So we have revised all the topics. So if any one of you wants to review any topic, ACCA has shared their links of videos. They can view that. And sooner than later, ACCA representative will also share a WhatsApp group link. You can also join that. And if there is any query, I will be replying it to you. So let's start the session. Also, please note my email address. So if you have any issues, any query, you can email me. So this is my email address, which is asad.ijaz@scans.edu.pk. So what is the objective of this webinar? First of all, we will be discussing how to perform questions in CBE environment. As we all know that from F5 to F9, it is now mandatory to perform exams in CBE environment. So it is very important to discuss how to perform the questions. So my focus will be on doing the questions in the spreadsheet format. So basically, it is a question-based revision of key topics. So what I have done is I have tried to pick at least one question from each key topic of F9, so that by this way we can cover the topic as well as the questions. So what is the paper pattern? The final exam in which you are going to appear will have 3 sections. One is section A, which contains 15 objective tests, each having 2 marks, and this will make a total of 30 marks or 30% of your paper. Then we have section B, which has 3 OT cases, and each OT case have 5 objective tests, once again making a total of 30 marks. And then finally, we have section C, which has 2 CRs, each having 20 marks, and each having multiple requirements, making a total of 40 marks. So that means 30% is from section A, 30% is from section B, and 40% is from section C. Now both section A and B represents objective tests, so that means we can say 60% of the exam are in objective tests. We also need to remember that there will be 5 additional objective tests, which will be SIRIT questions, and they carry no marks. Either these 5 seeded questions come up in section A or one separate OT case in section B. So that means in an exam, either you will see there are 20 objective tests in section A, or you will see that in your exam there are 4 OT cases, not 3 OT cases. So now let's move on to the day-wise plans. What will be our plan? So in the first day, we will try to cover the questions on investment appraisal with simple accept reject decisions. Then we move on to day 2, in which we discuss some specific investing decision questions, and as well as I will try to cover some cost of capital topic questions. On day 3, I will be covering the remaining cost of capital. Then I will also discuss the business finance questions as well as the business valuation. And on day 4, we will be discussing foreign exchange and working capital questions. Day 5 is for your question and answer sessions. So I will be there for 2 hours, and I expect that you will ask any question, of course, regarding F9. So is there any question regarding the day-wise plan? Any question? So I hope there isn't any, because I haven't seen any question from you. So let's start the first day session, that is the questions of investment appraisal. Let's keep it. I've shared the day-wise question with you. So this is the question number 1 that we will be discussing. And first of all, let's read the requirement. The requirement over here is calculate the net present value of the investment project in nominal terms and comment on its financial acceptability. So we have to calculate the net present value, that too in nominal terms, that is the money terms. And then we also have to comment its financial acceptability. Now let's read the background information. I once again remind you that all these questions have already been shared to you. Alisman has requested me to send the link of key topic videos. Dear ACCA will send it to you. And there is one more student. I cannot pronounce his or her name correctly, so I'm not pronouncing it. Any book you recommend to study along? Dear, there are several publishers available to study for F9. For example, BPP is there, Kaplan is there, we have Bacchus, and many more. So you can use any as far as you are convenient with that. So now let's read the information. ACCA company is preparing to launch a new product in a new market which is outside its current business operations. The company has undertaken market research and test marketing at a cost of $500,000. Now this cost should be irrelevant because it is a past cost. So we will ignore it. As we have to ignore it, I will simply cancel out it over here. As a result of which it expects the new product to be successful, ACCA company plans to charge a lower selling price initially and then increase the selling price on the assumption that the new product will establish itself in the new market. Forecast sales volume, selling price, and variable costs are as follows. So they have provided us with forecast of sales volume in the next 4 years. We have the selling price per unit and the variable cost per unit, which is same in all the years. Selling price and variable costs are given here in current price terms before taking account the forecast selling price inflation of 4% per year and the variable cost inflation of 5%. That means these prices are in current price. So I have to change it to the money terms as well. Incremental fixed cost of $500,000 per year in current price terms. So once again, the fixed cost is in current price terms. would rise as a result of producing the new product, which means it is irrelevant and should be the part of cash flows. The fixed cost inflation of 8% per year is expected. The initial investment cost of production equipment for the new product will be $2.5 million, payable at the start of the first year of operation. Production will cease at the end of 4 years because the new product is expected to have become obsolete due to new technology. The production equipment would have a scrap value at the end of 4 years of $125,000 in future value terms. So this is already in money terms. We don't need to inflate it. Investment in working capital of $1.5 million will be required at the first year of operations. Working capital inflation of 6% per year is expected, and working capital will be recovered in full at the end of 4 years. Tobacco companies pays corporation tax of 20% per year, with the tax liability being settled in the year in which it arises. So the tax liability is in the same year. The company can claim a tax allowable depreciation on a 25% reducing balance basis on the initial investment cost, adjusted in the final year of operations for a balancing allowance or charge. Tobacco company's current has a nominal after-tax weighted average cost of capital of 12% and a real after-tax WACC of 8.5. Now, once again, because we will be doing in the money terms, so we don't need a real WACC. So I'm just cancelling it out. The company uses its current WACC as the discount rate of the investment project. So now once again, let's read the requirement again. Calculate the net present value of the investment project in nominal terms and comment on its financial acceptability. So the first thing I will be doing is I will be preparing its format. So I should write the heading net present value of the project. Let's make the bold. Now I should write years, then I should write units, and that 2 in 1000. Then I will be writing the selling price. Now I'm writing the selling price separately because selling price is different each year. So we have year 0, 1, 2, 3, and 4. The life of the project is 4 years and the tax is not in areas. So we will produce the cash flows up to 4 years. The units are 200, 800, 900, and 400. So this will be 200, 800, 900, and 400. And the selling price given in the question is 15, 18, 22, and 22. 15, 18, 22, and 22. Now, because I will be working out in $1,000, so let's write the $1,000 and simply I will copy and then paste it to the next 4 years. Let's also make this bold. Now I will be preparing a complete format that includes sales revenue, then the variable cost, then we have fixed cost, and when we total it, we will be preparing in operational cash flow. Then I have to adjust tax savings in that. I should also be adjusting the working capital. Then I will be covering the initial investment and finally the scrap value. I will then have net cash flow. I will be using the discount factor, that of 12% as given in the question, and I will be having the present values. You can see I'm not underlining anything when I have to perform the total. Rather, what I will be doing over here is I will just leave one line before that. Same is for the net cash flow. And I will also make it bold. The reason for this is I don't want to waste time in my exam for putting lines. So this is the reason. Just make things simple as you can. This will save quite a lot of time. Now, once you have prepared the format, I request, first of all, let's write those values which are simple. And the most simple one is the initial investment, which is 2.5 billion. So I should write minus 2,500. Also, the scrap value in the last year is also given, which is 125. So these are the two most simpler values that I can put it in the format. Now I will start doing it with the sales revenue. So the sales revenue formula is equal units. I have already stated the units. Multiply by the selling price. So I have already stated the selling price. So I have just referred it with the sell. And then multiply it with the rate of inflation. So this will be 1 plus the rate of inflation, which is 4% for selling price. So this will be 4%. Raised to power the number of period, which is the years. So I've referred that. So this will be the inflated sales revenue, the nominal sales revenue. Have you all understood that? How did I perform that? Have you all understood that? So I hope you are. Now what you can do is, I have made a formula in such a way that for the next 3 years, what I will be doing, I will be simply copy and then paste it. And all my sales revenue for year 2, 3, and 4 will be calculated automatically. So I don't need to work out again and again. Similarly, I can calculate the variable cost. And for variable cost, I will be starting it with minus because variable cost is the cash outflow. And let's start with the bracket. And the formula will be units. Multiply by the price, or rather the variable cost per unit, which is 9 in this question. Multiply by 1 plus the rate of inflation, which is 5%. Raised to power the year. So this will be the formula for the variable cost in year 1. And when you enter it, I will get the variable cost. You can still view the formula in the formula bar over here. Now once again, I will copy and then paste it, so that I can get the variable cost of year 2, 3, and 4. Now moving on to the fixed cost. So this will be equal. The fixed cost is 500 and the rate of inflation is 8%. So this will be 500 into 1 plus 8% raised to power the year. Once again, I will copy and then paste it. So I will have the fixed cost of all the 4 years. Now coming to the operational cash flow, this will be the sum of all the above calculated cash flows. So this will be the formula to calculate the operational cash flow. It is on your screen. Equal sum E9 to E11. Always remember to close all the brackets in your exam, otherwise there are high chances that you will get an error in the exam sheet and you might be confused with that. So please carefully put the formula in your exams. So the operational cash flow is 690. Let's copy and then paste it. So I have the operational cash flow of year 2, 3 and 4. Now coming to the tax calculation, this will be equal minus the operational cash flow multiplied by the rate of tax. And the rate of tax in the question was 20%. It was 20%. So this will be 20%. I will once again copy and then paste it. So this will be my tax. Now coming on to the tax savings, let's see how do I work it out. So I will be doing a separate working for the tax savings on capital allowance. This I will specially be doing if the capital allowances are in reducing balance method. For that, I will be first stating years. And this will be 0, 1, 2, 3, and 4. I'm also stating $1,000 because I will be working out in $1,000. And my first chance will be to determine the opening balance. And the opening balance of year 1 is 2,500. Now, the capital allowances. So in the question, it is 25%. So let's multiply the opening balance with the 25%. So this will be 625. Now my next year opening balance will be the difference between the opening balance in year 1 minus the capital allowance. I will now then copy the opening balance for the next 2 years. And same I can do with the capital allowance. I will copy and then paste it into the next 2 years. Remember that, and always remember that we will not be copying capital allowances working for the last year. This is because in the last year, we should have 2 different allowances. One is the capital allowance and the other one is the balancing allowance. So in the last year, what we do, we simply calculate both of these by subtracting the opening balance, subtracting the residual value from the opening balance. So the residual value was 125 and the opening balance was 1054.69. So 929.688 will be the capital allowance value. Now, I will be implementing tax on that. So if I simply multiply the capital allowance with the rate of tax, I will have the answer of tax saving. I will copy and then paste it to the next 3 years, and I will then have the tax saving working of year 2, 3, and 4. One of the students has asked me, can you repeat capital allowances? Yes, sure. The complete one? Should I have to revise the complete one? Okay. Here, first of all, we have to calculate the capital allowance before calculate the tax on that. So what I do, I will write the opening balance. So the opening balance will be in year 1 because there won't be any opening balance of year 0. Now the asset cost 2.5 billion. Because I was working in $1,000, so I have written 2,500. The first capital allowance will be the 25% of the opening balance of year 1. So what I have did is I have used this formula. I have referred the opening balance and then multiplied it with 25%. So I get the answer of 625. Now in the next year, the year 2's opening balance should be the opening balance of year 1 minus the capital allowances. This will mean my year 2 capital allowance will be the opening balance of year 2 multiplied by the rate of capital allowance, which is 25% given in the question. Now, because the working of opening balance and capital allowance will be same for the next years, what will I do? I will simply copy and paste it. So I have just copied the opening balance working in year 3 and in year 4. But for the capital allowance working, I have copied and pasted in year 3, but I have not pasted in year 4. This is because in year 4, we should have 2 different allowances. One is the capital allowance and the other one is balancing allowance. So in an exam, we do it in combine. And how do we do that? We simply subtract the residual value from the opening balance in the last year. This is how I do that. Now, as far as working of tax saving is concerned, it was very simple. I have simply multiplied the capital allowance with the rate of tax, which was 20% in this case. So I got the answer of tax saving. So this is how I did that. Any question? Yes, Noman. In the last year, we are receiving both capital allowance and balancing allowance. Why we have done this in year 4? The opening balance minus scrap value. This is because in the last year, we have 2 different allowances. One is the capital allowance and the other one is balancing allowance. So this is the way to calculate both of these allowances combined. This is the way to do that. So anything else? I hope I have explained it. Osama has asked me, if there is no residual value, we just take the opening balance of the 4th year as capital allowance? Yes, Osama, it is true. We will simply do that. So now let's move on. I will simply refer the tax saving working with the tax. Remember that. Don't try to copy it. Because if you copy the working, it will copy the formula, not the values. So the right way to do is you will simply write equal or type equal and then refer to the working like this. Equal E38 and that's it. Now what I do, I once again copy and then paste it to the remainder 3 years and I will have the tax saving working referred. Now moving on to the working capital working, I'll once again write the heading working capital. Let's make it bold. Also, I'm simply copying and pasting the years. Let's make this bold as well. For the working capital working, I will first write the required working capital and then I will prepare the cash flows. Now, remember that the working capital requirement is at the start of the period. So I will start it from year 1, but remember that this is not the end of year 1, rather it is the start of year 1. So in the question we have been told that the working capital requirement is how much? $1.5 million. So it means it will be 1,500. But from the next year, this will be inflated by 6%. So this will be multiplied by the working capital of the previous year multiplied by 1 plus 6%. Once again, I will simply copy and then paste it to the next 2 years. And this will be my working capital requirement for year 3 and 4 as well. Now coming to the cash flows, remember that as the working capital is invested at the start of the period, it will mean I will be working out the cash flows in the preceding period. So this will be equal the working capital required in year 0 minus the working capital required in year 1. So this will be minus 1,500. I will then simply copy and paste it to the next 4 years and I will get the answers of working capital cash flows. One plus 6 raised to power 2 for year 2 working capital? No, we won't. In case of working capital, we are not using the current prices. Rather, we are using the values of the preceding year. So whenever you use the values of preceding year and not the current prices, you won't take its relative power. You won't take its relative power. For example, in year 3, as you can see that we have used the working capital of year 2. So for year 3, what we simply will do is we will simply multiply it with 1 plus 6%. We won't take its power. We will take power only if the cash flows are in current price terms, that is from year 0. So this is the reason. Now once I have prepared the working capital cash flows, let's refer it. So this will be equal minus 1,500. Copy and then paste it to the next 4 years. So this will be the working capital cash flows. Over here it is. Now all my net cash flows has been completed. I will now simply sum from operational cash flow to the scrap value. So for year 0 it is minus 4,000. I will simply copy and then paste it for the next 4 years, and I will have the net cash flows of year 1, 2, 3 and 4. I will now calculate the discount factor, and the formula for discount factor is 1 plus the rate of discount factor is 12% raised to power minus n, and n is years. So let's refer years. Let's refer it. So this will be 1 plus 12% raised to power minus the year. I have referred the year. I will then simply copy and paste it for the next 4 years, and I will have the discount factors of year 1, 2, 3 and 4. So in this way I don't need to go and see the table. I can do it very quickly in the spreadsheet. Let's also round it off to 3 decimal place, because generally the discount factors are in 3 decimal places. Now if I multiply each net cash flow with its discount factor, I will have its present values. Once again, I will copy and then paste it for the next 4 years to determine its present values. And let's also make it bold. One of the students has asked, sir, discount factor is given right in paper? Yes, they are given in the exam, but if you know the trick to calculate discount factor in the spreadsheet, you will see that it is a much quicker way to do that. So you can actually save quite a lot of time by this formula. Otherwise, yes, they are given in the exam and you can always refer that. Now, the NPV, and this will also be in $1,000. So the NPV will be the sum of present values. So I will simply sum all the present values and the answer is 11980.3, and also it is in positive. Now, because it is a final answer, because in the question we have been asked to calculate the net present value of the investment project, so we have calculated it. I recommend you should highlight it in the exam so that marker can easily see your answer. I also need to recommend whether this project is acceptable or not. So as the NPV of the project is positive, so we should accept that. So this should be the final answer. One of the students has asked me to repeat the calculation of working capital. So here it is. First of all, we have to calculate the required working capital. Now, for the first year, it was 1500, and from the next year onward, we have increased it by 6% as stated in the question. So you can see that. Whatever the working capital was in the last year, I have just increased it by 6%. Now for cash flows, I have to work it out in the preceding year because working capital cash flow is at the start of the year. And any cash flow which is at the start of the year should be the cash flow of the preceding year. So this is the way I had done that. You can refer it in the year one as well. You can clearly see that whenever there is an increase in working capital, there is a cash outflow. And similarly, with this way, in the last year, all the working capital invested will be recovered as well. So this will be the first question. One of the students asked me, kindly email me this question. So all the questions will be emailed to you. And even if you haven't got the email, if you see on the right side of the screen, there are a topic name handouts, and in the handouts there is a file of day1.docx, and in this file you will find all the questions. How to calculate tax saving of final year if question not stated its balancing figure. Dear, then the opening balance will be the last value. We will assume that the residual value is 0. I will just do it for you. Okay. So if I assume that the residual value is 0, so I will simply write 0 for that. And I will get the answer. Okay. So if there is no residual value, we will simply subtract 0. Now let's move to the next question. So in this question, the first requirement was to calculate the net present value of the investment project in nominal terms and comment on its financial acceptability. It is a 12 marks question, but this is a pretty much similar question of what we had covered. So this is your home assignment. Please mark that. The requirement A is your home assignment. So we will be discussing how to calculate the net present value of the investment project in real terms. And then we will be comment on its financial acceptability. So when there is a question of general inflation, we can calculate the net present value in two ways. One, in nominal terms, the nominal method, the money method, and the other method is the real method. In this question, we have been asked to calculate the net present value in the real terms, that is the real method. So please read the full information. I'm muting my mic so that you all can read the question carefully, and then I will be discussing its answer. I hope you all have read the information. So once again, I will be estimating the NPV using year method. As usual, I will be first preparing the format. So this will be years, 0, 1, 2, 3, 4. I guess once again it is of 4 years. In this question, as the tax is in arrears, this will mean I will be making the cash flows of up to year 5. All my working will be in $1,000. So let's copy and paste. Now in this question, we have already been given the value of sales revenue. These are the real. These are in real terms. So it is 1250, 2570, 6890, and 4530. We have also been provided with the cost, which is 500 minus 1000 minus 2500 and then minus 1750. So I will have my operational cash flow directly. Remember that we will be having real net cash flow, that is not in the nominal terms, if we have to use the real method. So I have not inflated the sales revenue nor I have inflated the cost. So my operational cash flow will be the sum of both of these. Once again, I will copy and then paste it. I will now have the calculation of tax savings on capital allowance. Then there is some working on working capital, the initial investment, and there is no residual value in this question, so I have not written that. This will be my net cash flow. I will have to discount factor, and the discount factor should also be of real one, which is not given in the question, so I will calculate it, and hence I will have the present values. I can then also calculate the NPV, and that too in $1,000. Now let's make few cash flows into both, especially the total one. Now, as the tax is in the area, so I will be doing my first calculation in year 2. So this will be equal minus the operational cash flow of year 1 multiplied by the rate of tax, which is 30% in this question. So the tax is 225. This is the tax of year 1, but because the tax is in area, so this will be the cash flow of year 2, not in year 1. Similarly, I will simply copy and then paste it to calculate it for the next 3 years. The initial investment value is once again given in the question, and it is 2 million. So this will be 2,000. Now let's once again work out tax saving on capital allowance. So tax savings on capital allowance. So once again, I will be writing opening balance and then the scrap value. I should have got the space of writing years. This will be 0, 1, 2, 3, 4, and 5. And also write $1,000 as a heading. The opening balance is 2,000. Sorry, I should write capital allowances, not the scrap value. Let's change it. So the capital allowances, once again, 25%. That means in year 2, the opening balance will be the opening balance of year 1 minus the capital allowance, and it is 1,500. And once again, I will copy and paste it up till the last year, which is year 4. The same I will be doing it for the next 2 years. That will be in year 2 and 3. And in the last year, once again, I will use the formula opening balance minus the residual value. Now the residual value is 0 in this case. There is no scrap value. So I've written that. Now I will work out tax. And because the tax is in arrears, I will be working out in year 2. So this will be the capital allowance of year 1 multiplied by the rate of tax of 30%. So this will be 150. Let's copy and then paste it. So I have the tax saving of year 3, 4, and 5. Once again, I will be referring it equal 150. Let's copy and then paste it in the next 3 years. So I have the answers of tax saving on capital allowance. Now I will be working out the working capital, the value of working capital. So once again, I will be estimating the required working capital and then the cash flows. I should allow some space for years and then in $1,000. Why not you copy and paste it over here? Let's copy and then paste it over here. Now in this question, the working capital required is the, I think 10% of sales. Yes, 10% of the sales in that year. So equal, let's refer to the sales revenue, which is 1250 multiplied by 10%. So this will be the answer. I have referred the sales and then multiplied it with 10%. So I will simply copy and then paste it for the next 3 years. So I have the working capital requirement for year 2, 3, and 4. Now, to prepare the cash flow working capital, my method will be same, equal. I will write it from year 0, so it will be equal requirement in year 0 minus the requirement in year 1. So this will be minus 125. I will simply copy and then paste it up to year 4. So you can see that when the working capital requirement decreases, there is a cash inflow. And in the final year, all the working capital invested is recovered in this by this method. So let's refer it back. Equal. This will be my cash flows. So this is how I will refer it. Simply copy and then paste it. Now by that I have completed the working of net cash flow. Let's sum that. So this will be my net cash flow. Let's copy and then paste. Now coming to the discount factor, because the method is real, I have not inflated any cash flows. All my net cash flows are in real terms. So I should also use the discount rate in real terms. But in the question, we have been provided with the nominal or the money cost of capital of 12%. So first of all, we will be estimating the real cost of capital. And the formula will be, I am writing it for you so that you people can easily remind yourself. It will be one plus n the nominal rate divided by 1 plus the inflation rate, and whatever the answer is, I have to subtract 1 from it. So let's do that. Equal 1 plus 12% the nominal rate divided by 1 plus the inflation rate, which is 4.7% in this question, and then minus 1. So when you calculate it, the answer is 0.06972. If you convert it into percentage, it will be 7%. That means the discount factor should be 7%. Let's refer it. It is 7%. So now I can calculate the discount factor at 7%. This will be 1 plus 7% raised to power minus the year, which is stated above. Let's copy and then paste it. And also round it off to 3 decimal place. One of the students has asked me why we have done this discount working. This is because this is a real method, and in real method we prepare all the net cash flow in real terms. So I have not inflated any cash flows. All these cash flows are in real terms. But for that, I have to use the discount rate in real terms, not in the nominal terms. But in the question, we have been provided with the nominal terms, but not the real discount rate. So this is the way to calculate the real cost of capital. The real cost of capital. And that is 7%. Now for the present value is concerned, this will be net cash flow multiplied by the discount factor. Let's copy and then paste it in next year's. And for the calculation of NPV, once again, I will simply sum the total present values. And the answer is 3394.79. Also, once again, as the NPV is positive, so we should accept the project as the NPV of the project is positive, so we should accept. And we should also highlight the final answer of NPV like this. So any question? Is my speed appropriate? Or you think I'm going really fast? One of the students asked me, what about that opening balance minus scrap value? Dear, in this question, there is no scrap value. There was no scrap value. So because there is no scrap value, so over here you can see that the working is opening balance minus 0 because there won't any scrap value. So one of the students is pretty good with the speed. Thank you for your feedback. Anyone else? So I presume everything is getting fine. So now let's discuss another question of the day. Now in this question, we have been asked to prepare a revised draft of the evaluation of investment proposal and comment on its financial acceptability. So in this question, what difference is actually we already have an NPV in the background information. So, but the problem over here is that this has been prepared by a junior employee. So there are errors in that. So this is a very good question to revise the topic. So let's read the background information and then I will discuss it with you. So if you had read the information, we have all the complete information to prepare the net cash flow and its NPV. But this is a very interesting question, because by doing that, we can actually compare and see what are the mistakes in that has been prepared by the junior employee. So I will be a bit more quicker than earlier to solve this, because most of the calculation are almost on the same pattern that I had covered. You can also have the recorded session of this as well. By the end of the session, ACCA will send it to you. So you can always see the recording again and pause where you want. But in the meanwhile, if you have any questions, you can ask me. So once again, I will be writing years. Taxes in arrears, as stated in the question, and we have the life of 4 years, so this will be year 0 to 5. I will be working out in $1,000. Rather, I should first write, because the units are different, and so is the selling price and variable cost. So let's write these first. So if I write these first, it will be easy for me to refer it. So the units are 95, 100, 150 and 150. 95, 100, 150 and 150. Selling price is 25, 25, 26 and 27. 25, 25, 26 and 27. And the variable cost is 11, 12, 12 and 13. Now I will be writing $1,000. Let's copy and then paste it. Now I prepare the format. One is sales revenue, then variable cost, fixed cost, and I have the answer of net cash flow. Rather, the operational cash flow. Then I will be calculating tax and tax savings. Then the working capital. Was there any working capital, by the way? No, there won't be any working capital in this question. Yes, won't be. So I should replace it with the initial investment, and then there won't be any residual value as well, so I'm not writing it. So this will be my net cash flow. Let's make it bold. The complete bold. Now let's start the question. First of all, let's calculate the sales. So this will be equal units multiplied by the price multiplied by 1 plus the rate of inflation, and the rate of inflation in selling price is 4.2% raised to power the year. So this is it. So once again, I will simply copy and then paste it. Similarly, we can calculate the variable cost. This will be equal the number of units multiplied by the variable cost multiplied by 1 plus the rate of inflation, which is 5% for variable cost, raised to power the year. So this will be the variable cost in total. As usual, I'll simply copy and then paste it. Coming to the fixed cost, this will be equal the fixed cost, which is $150,000. So 150 into 1 plus the rate of inflation, which is 3%, raised to power the year, which is stated in E92. So here is the fixed cost for year 1. And as usual, we'll simply copy and then paste it. Talking about the operational cash flow, this will be the sum of the cash flows of sales, variable cost, and fixed cost. So this will be 1223 in year 1. I will simply copy and then paste it to calculate it for the next 3 years. Coming to the tax, this will be equal the operational cash flow multiplied by the rate of tax, and the rate of tax in the question is 22%. So this will be multiplied by 22%. As you will simply copy and then paste it. Now coming to the tax savings. For this, we will be calculating the tax saving on capital allowance. I should write years. Like this. As I will first estimate the opening balance, and then I will be estimating the capital allowances. So now in year 1, the opening balance will be the initial investment, which is cost of the machine, and it is 1800. 1800. The capital allowances is 25%. Reducing balance, so this will be the capital allowance for year 1, and the year 2 opening balance will be 1800 minus 450. As well as simply copy and then paste it for up to year 4, because the life of the asset is 4 years. Similarly, I will be doing it for the next 2 years. And in the last year, I will simply referring the same value, because the residual value is once again 0. Now coming to the tax part. As the tax is in area, so I will be working out 1 year in area. So this will be the capital allowance value multiplied by the rate of tax, which is 22% in this question. I will simply copy and then paste it to calculate the tax savings. So finally, I have the answers of tax saving. Let's refer it. Are you all with me? So what is the initial investment? It is 1800. It is 1800. That means the net cash flow will be equal sum of all the cash flows from operational to the initial investment. So this will be 1800 in year 0. Let's copy and paste it to calculate it up to year 5. So this is how the net cash flows will be. Now I will be discounting it. So the discount factor and the rate of discount factor should be 12%. So this will be equal 1 plus 12% raised to power minus the year. Oops. Let's do it once again. Equal 1 plus 12% raised to power minus the year. Let's copy and then paste it to calculate the discount factors. This is the quickest way to calculate the discount factor. So round it off to 3 decimal place. And so the present value will be the net cash flow multiplied by the discount factor. Let's copy and then paste it. And also I'll make it bold. So the final NPV rounded off to $1,000 is equal sum of all the present values. So it will be 2508.55 positive. Because this is my NPV, the final answer, let's make it bold and as well as highlighted. And once again, my NPV is positive, so I should write as the NPV of the investment is positive, so we should accept the project. So this is how we do that. So any question on that? Now, let's compare the two NPVs. So the one NPV is over here. I hope you all can see that. over here. So with the comparison, we can see that what were the mistakes the junior employee had made in the evaluation. So you can clearly see that he has correctly calculated the sales revenue of year 1, but from year 2, the sales revenue was incorrect. This is the same thing that the junior employee had done in the variable cost and fixed cost. Also, they have included the interest payment, and remember that interest payment will never be the part of cash flows. They have also calculated the tax allowable depreciation on a straight line basis. However, in the question, it was on reducing balance basis. Also, the tax allowable depreciation is a non-cash cost, so shouldn't be the part of cash flows. So there are two mistakes regarding the tax allowable depreciation. One, it is on straight line basis, and the other one is that the junior employee has made it the part of cash flows. So these are the few mistakes that junior employee has made. And this is what the requirement B has asked us. To explain the two reasons why you have made to draft evaluation in part A above. So you have to identify two mistakes, two reasons in doing that. So the clear one will be the interest payments and the tax allowable depreciation working. So have you all identified that? Have you all identified the mistakes in the questions? Now, is working in the NPV evaluation on the spreadsheet is easy one, isn't it? It is very quick way to do the question of NPV in the computer-based format. Anyone who has done F9 manual way, that is the paper-based. Has anyone in the group has done that? Okay, at least one of them messaged me. So isn't it the easy way to do your exam on the computer-based? One of the students asked me to please explain note 2 about finished good inventory. The note 2 says that the sales and production volume are the same and no finished inventory is held. This will mean my production units and sales units both will be same. And this is the reason I've used the same number of units for sales as well as variable cost. Because the production units and sales unit will be same. Anyone having issue in doing the question in the spreadsheet environment? I hope I have helped them out. So there is one more question, and I've specially put it for your home assignment. So please note that you have to perform 2 questions in your home assignment work. One is the part A of question number 2, and the other one is with the heading of home assignment. Whoever done that and wants it to be reviewed with me can email me after doing it. You all should have my email address. You all should have the link of WhatsApp group as well. So if you people can join, then we can have a discussion on any point, any topic that you will face problem. So this is it from my side. I hope this brief session has helped you a bit in preparing your exams. Tomorrow I will be discussing some specific investing decision questions and as well as going to the cost of capital questions. One of the students has asked me, please explain more on after tax and before tax cost of capital. The only point over here I would love to state it over here is that you will always use after tax cost of capital. You will always use after tax cost of capital. Okay? The only point in which you will be using the before tax cost of capital is where the examiner states you. Okay? Now, what is the difference between an after tax cost of capital and before tax cost of capital? We will be discussing, or you can ask me when we will be discussing the questions on cost of capital. Over here, I will try to explain it. One student has asked me, is this the only session or there will be another one? Dear, it is a series of 5 sessions. So up till Friday, I guess, I will be there for you people. And especially the last session will be very important for you people because it is purely on question and answer session based. Yes, timing will be same. One of the students has asked me about the timing. Yes, the timing will be same. Will there be a test exam on the last day? Mock exam, I mean. I think there isn't any mock exam this time around. But if you really want to discuss that, you can download the videos of the last session of March 2018. And in that, there is a video of mock debrief. So you can view that. Yashim Sagar has asked me, will we cover the theory as well? Dear, we will be covering different questions. So obviously, when there is a requirement of theoretical, we will be discussing these two. So I think this is it. Thank you very much for your time. I will be joining you tomorrow once again at the same time. So thank you very much.